Hi, this is John Persinos, Editorial Director of Investing Daily. Welcome to my video interview with my colleague, Robert Rapier. Robert is our in-house income expert. He's Chief Investment Strategist of Utility Forecaster, Income Forecaster, and Rapier's Income Accelerator. Today, we will discuss the utility sector, and nobody understands utility stocks better than my friend here, Robert. Robert, thanks for joining us.
Thanks for having me, John.
You betcha. Utility stocks are subject to interest rate risk, and elevated rates have weighed on the sector. The Federal Reserve has hiked interest rates to curb inflation, but the central bank has hit pause on monetary tightening, and we should get rate cuts later in 2024. Under these conditions, what's your prognosis for utility stocks this year and beyond?
Yeah, you knew utilities were probably not going to have a good year when they started the interest rate hikes. I mean, these things are cyclical, right? I think we'll start to see them recover as soon as it's clear the interest rate hikes are over. Utilities get hurt by interest rate hikes in a couple of different ways. They have competition from bonds. Bond yields start to get better, but then utilities are a capital intensive industry and they have to pay more than for interest. So interest payments on the capital they deploy. So, as it becomes clear that the interest rate hikes are over, and especially as they start to come down, I think you'll see utilities start to outperform.
Robert, you're not just an expert on income investing, you're also an expert on energy. You have a lot of experience in the energy industry. Now, we all know about renewables, solar, wind, geothermal, these green technologies. They get a lot of media attention, deservedly so. But are there any stealthier, under the radar technological innovations in energy that have caught your interest that the mainstream media is sort of ignoring?
Yeah, so I like energy storage a lot. I mean, it's the holy grail. And there are a lot of different companies working on a lot of different approaches. When you think about the intermittency of wind and solar, wind and solar are great, but they can stop output, very quickly, especially wind. It can be windy and then the wind dies down. And so that plays havoc with the grid because the grid operators have to respond quickly. And so if you can deploy large utility scale battery banks, and there are a lot of unique battery chemistries that are more appropriate for stationary storage, like very heavy batteries that you could deploy, an acre of batteries to potentially back up the fluctuations in the grid. So far there's not been one market leader jump out. Tesla does some of this. Tesla does put battery packs out there, but it's not clear that lithium will be the way to go. Somebody else may end up winning, but that's a space I keep an eye on. I've called it the holy grail many times. If we want to be fully renewable, we're going to have very fast acting and utility scale storage that's, cheap enough that we can afford it.
I went to college in the 1970s and protesting nuclear power was all the rage. And now, ironically, a lot of my green friends, the mainstream environmental movement, is embracing nuclear power. That's a reverse that I never thought I'd witness due to climate change, that the nuclear power actually can help reduce the carbon footprint. What sort of opportunities do you see in the renaissance of nuclear power? For instance, the price of uranium, the price of yellow cake has been soaring lately.
Yeah, so you're right. I mean, and it's a math problem. I mean, when you look and all the major energy agencies have said there's no way we'll get to carbon zero without nuclear power. With big batteries and stuff, maybe you might eventually get there, but nuclear is a scalable, firm power source that could replace coal-fired power plants. And coal and wind and solar can't do that. I mean, they're dispersed, they're not concentrated, but you could have a nuclear plant come in and displace a coal-fired power plant. And so there are a lot of companies that are involved in the nuclear space. Companies like GE have an interest in nuclear, and they have some reactor designs, but that's a very small part of their business. So if you want a pure play, don't look at a construction company. Don't look at a company that has nuclear as a part of its business or a utility that has some nuclear plants. You should look at the uranium producers. And, Cameco has gone up by 200% in 5 years. They're the biggest uranium producer in the world. They're a Canadian company. Those are the companies that should do well as the purest play on the nuclear power renaissance.
Although far from vanquished, inflation has dramatically cooled, and the Federal Reserve is expected to cut rates this year. If not in June, then in September. Won't the first interest rate cut boost the utilities sector?
Yeah, I think that will be the catalyst that'll spark a recovery in utility stocks. But yeah, I think especially contrarian investors ought to be kind of concentrating in utilities right now because they will bounce back. They will rise to lead all sectors again at some point.
A lot of income investors focus on current yield. Explain for us why a history of dividend growth is important too.
So, if a company is growing dividends sustainably, that means the company is well positioned to pay out the shareholders out of the cash. And that's one reason I prefer dividend paying companies because if a company is able to pay back, at least they're making enough money to be able to do that. But you also have to keep an eye on their debt and make sure they're not paying it out of debt. So that's why I say it needs to be sustainable. If you notice debt going up and they're paying dividends out of debt, that's a warning sign there. So you need to be sure, companies with a long track record of paying dividends and with a reasonable payout ratio over time, those are the long-term winners. Those are where you want to be. And, especially for income investors who are relying on that income, that's what you're looking for. You're looking for a long track record of sustainable dividend payouts.
Exactly right. Robert, thanks so much for your time. It was very illuminating.
Thanks, John.
You've just heard from Robert Rapier, income expert who's chief investment strategist of our premium trading publication, Utility Forecaster. Robert is also the chief investment strategist of Income Forecaster and Rapier's Income Accelerator. To learn about a special deal where you can subscribe to all three publications in one fell swoop, consult the article that accompanies this video on the Investing Daily website. This is John Persinos. Thanks so much for watching.